Hi everyone. So now we are starting with the departmental accounts. Okay, we are starting with departmental accounts. So as usual, before starting, we will start with one story. Okay, we will start with one story. What story, sir? Let us assume there was one person. Okay, there was one person called Mukesh. There was one person called Mukesh. Mukesh. He was running a business. He was running a business. What business, sir? He was running, let us say, textile business. Textile business. Let us say textile business name called Friends. Okay. His textile business was Friends. For this textile business, he used to produce goods. I mean, he used to produce the cloth himself. He used to produce the clothes himself. Okay, he had that too. He had that production too. The production name is called as freelance. Let us assume Mukesh was running a cloth business. Okay, basically textiles. Okay, he was running a textile business, and he had one also. For the textile business, cloth used to go from his manufacturing unit, which is freelance. Now he had two kids. Okay, two kids he have. He has two kids. Give me a second. He has two kids. One guy name is Anant. One guy's name is Anant. The other guy's name is Akash. One guy's name is Anand, the other guy's name is Akash. Now our Mukesh decided to retire. Okay, he used to run both the business, freelance as well as Friends. Okay, freelance as well as Friends, both he used to run. Now Mukesh planned to retire, and he told his sons, Anant, come here, Akash, come here. Hereby I am going to take rest in my home. I am giving my business to you people. You people should make me proud. Take my business into the other level. Okay, he told like that. So Anant and Akash, they are brothers. Both used to hate each other. Hate each other. Okay, both used to hate each other. Now, first day they went to the Friends. They were like, one guy pushed this side, the other guy pushed this side. He was like, I am the owner, the other one is, I am the owner. So much fighting was going between. Fighting was going between these sons. So Mukesh saw all these things and he was like, at my last moment also you people are doing like this. What to do? He told, Anant, come here. You are going to look after the friend's business. You are going to look after the friend's business. Who? Anant. Okay, sir. Akash, you don't worry, you are going to look after the freelance business. You are going to look after the freelance business. Done. Done. So sorted. Akash will be there in the manufacturing segment. Anant will be there in the retail segment. Okay, boss, no issues. Now, at the end of the year, Mukesh asked, get me a P&L. Mukesh asked, get me a P&L. Anant bought a P&L. And P&L was showing 400 crore rupees profit. Let us assume, as it's a small scale, only 3 people, let us assume 40 crore rupees profit. 40 crore rupees profit. Now, Mukesh was so happy. And he called all his, like his wife, his the other son, and he was like, see, we have made a profit of 40 crore. Mukesh told, see, we have made a profit of 40 crore. That time Anant told, not we. After you retired from the business, no, you are not even, you are not even sleeping in that direction. One. Next, my mom, she is busy in some cricket, that things and all. So she is also not coming. 2. And one more brother, he is just sending me a goods. I am the person who is selling. And I am the person who is earning profit. Anand told like this. Akash got triggered. He was like, boss, how you are going to sell the goods which is not produced by me? How you are going to sell the goods which is not produced by me? So Anand told, boss, what you will do by producing if I don't sell it? What are you going to do? You will keep it in go down. You are going to give to your girlfriend's dad, mother. No, right? How much you are going to gift? So you also can't do anything without me. So both ego clashes now. So Mukesh told, listen Anant, listen. I know you made a sale, but also production is also important, no? Son, even production is also important. Without production, how will you sell? I will get it from outside. Yeah, you will get it from outside. For example, if the MRP is 600, no? MRP is 600. From outside, you are getting it for 400. Now, we are only producing and we are selling you, we are giving it for 240 rupees. We are giving you that for only 240 rupees. Right? So, in this profit which you earned, even Akash has a contribution. He is sending you a goods at 240. So Anand told, okay, show his profit. Where is his profit? Akash production cost is 240. For any cloth, Akash's production cost is 240. He is sending to his retail at rupees 240. From where he will earn profit, Papa? He is only sending to him, no? From where he will earn profit, right? So Akash can't show the profit. So Akash got triggered and he was like, Dad, this is done. Even I don't want to do like this. Even I want to show the profit. So Mukesh came with one idea. Boss, listen. Here onwards, Akash is also not going to send you a goods at cost. Akash is also not going to send you a goods at 240. Akash is also going to keep certain profit margin. Later he will send it to you. That cost plus profit margin will be your cost. Upon that you earn the profit. Then we will analyze who is earning more profit, who is earning less profit. Right? So Mukesh, what he did, he divided he divided Akash work separately and Anant work separately to analyze how Akash is doing the business, how Anant is doing the business. How Akash is doing the business, how Anant is doing the business. Although they were in the textile business, there were two departments, right? One is manufacturing, the other one is retail. One is manufacturing, the other one is retail. So how the performance, how good they are performing, to analyze that, he divided the segment. He divided the segment. So here for Akash business, for manufacturing business, we are going to prepare P&L separately to analyze how much he is earning. To Anant, we are preparing separate P&L, trading P&L, to analyze how much he is earning. Okay. Now the question comes, there was one huge building. In that only they had a manufacturing. This is retail. This is retail. This is manufacturing. Now the question comes, sir, who will pay the rent of this building? Who will pay the rent of this building? Whether Akash is going to pay or Anant is going to pay. Anant will say, you are also there in the building, you only pay. Akash say, I am there, I agree. Even you are there, you only pay. You are having retail, no, that day you are showing off, no profit, that this, now you only pay. So the fight starts. That's why even all these general expense will be there, no, which is common for both, which is common for different departments. That also we are going to share it in different ratios. Okay. Basically, we are going to split the whole business expense into different departments expense and whole business income into different departmental income to analyze how good the business is doing, how good the departments are doing, how good the managers of that particular department is contributing to the growth of the organization. Okay, now tell me whether you people understood the story. Hello? Understood the story? Okay. So, shall we now jump into the technical part? Okay, fine. Listen. For effective operation, efficient management and adequate control, many big organizations that deals with the various products or service or multiple type of specialized activities consider each product, service or specialized activity as a separate segment or unit of the entity. That is, if you take the Reliance, they are into the clothing, they are into the bazaar like supermarkets, they are into the fruit vending, fruit and vegetables thing, that Reliance Fresh, they are into the SIM, they are into the infrastructure, they are into the insurance. So the segment, as a Reliance Industries Limited is a huge company. Under that there were many departments, segments are there. Okay, so they divide it because they want to control, no. Today telecom industry and if they make telecom and trends together, they can't run the business. They can't keep the control over telecom, Jio as well as trends, right? So they will separate the segments. Okay. The concerned entity, in order to record the detail of a segment or unit, rationally split into few segments or unit, which are technically referred as a departments. So that segments, inside that segment also they are going to divide certain parts, few segments or units. They are going to divide that units into their segment, going to divide that segment into units. Those units are technically called as departments. See, they have given certain example. If it's a banking industry, Forex is one department, that is where a department deals with exchange of the foreign currency. Underwriting is one. Underwriting is where a bank or any underwriter promises the company, if the public do not subscribe for their shares, they are going to subscribe on behalf of the public to get a minimum subscription, that is 90%. Credit card department one, it might be loan department one. Inside loan also they might be having house loan, vehicle loan, etc, etc. There were different departments. Okay. Hospital, if you take, there are rooms, medical stores, cafeteria, right? Rooms to now hospitals, what to say, they are earning like anything, because nowadays hospitals are run by a MBS. Earlier it used to be run by the doctors only, no. Nowadays majorly hospitals are run by the MBS, the doctors, next generation people. and they made many things, hell lot of things in a hospital. Hospital means patient should stay, no? There also they have given a 5-star facility, right? There will be a Starbucks, there will be a cafe, there will be a, you know, Haldirams, some Domino's, etc. will be there inside a hospital only. And upon that rooms, general ward, semi-special, special, super special, upon that luxurious, what to say for that? He is a patient and they want to sell the room as a luxurious, where they will charge huge, where they will give a facility of 5-star, like that. There were many segments in hospital also. Next, hotels. In hotels, basically rooms will be there, restaurants will be there, confectionery will be there, gym will be there, spa will be there, etc., etc., etc. Departmental stores, if you go stationery you can see, electronic you can see, grocery you can see, vegetables and fruits you can see, some snacks you can see, daily essentials you can see, sometimes clothing, like that. Two-wheelers if you go, motorcycle, that is gear vehicles, as well as scooters, separate. Automobiles if you see, hatchbacks, sedan, SUV, EV. In that too, if you take Tata, first it will be getting divided into 4, or you can say Tata Motors divided into 2, right? Non-commercial vehicle and commercial vehicle. Non-commercial they have car, etc. Whereas commercial they have a truck, they have a small goods transporter, they have a bus, so many things like that. In that also they have, in car if they go, they have a hatchback like your Nexon, Harrier and all. They have a sedan, Tata, earlier they had something called Indigo CS or something like that. Nowadays I don't think there is a Tata sedan. Tigor is there, it is not even a sedan, it is not even a hatchback, it is in between that, Tata. But of course there were sedans. In a Jaguar there is a sedan, in the Jaguar, but they never, you know, try to get attention of people, telling that it's of Tata, because it has its own brand value. JLR, Jaguar Land Rover, has its own value, so Tata never want to associate its name with that, although it is owned by Tata. So yes, sedan is there. You can see SUVs, your Nexon, your Tata Safari, all those things are SUVs. EVs, again they are doing very good in EV. Once the EV segment came, Tata was nowhere. Suddenly they came up with Nexon and they acquired a market like anything. Creta, etc. went like, Hyundai went into huge loss, Suzuki to next level, Toyota, they are not in the competition only in that segment, so on. So these are the certain departments which might be there in these areas. Okay. Now, management of a concerned entity wants to evaluate the operational results for each department. They want to find out operational result of each department. Hence, on the basis of system of responsibility accounting, the idea of departmental accounting has emerged and widely implemented. It is emerged and widely implemented. Almost big organization, everyone is having a departmental accounts. It is not something separate or something. If you add all the departments accounts, you will get a organization accounts. If you add different department accounts, you are going to get a organization account. That's it. Now the question comes, sir, what do you mean by responsibility accounting? For better performance and control, responsibility and authority are decentralized to each department. A manager or a supervisor is assigned to each department to whom the target and budgets are provided for carrying out the operations. Although all departments are cost centers, all may not be the revenue centers. At the end of the certain period, the performance of the departmental center is assessed and suitable measure are taken for a betterment. So what they will do is they are going to decentralize the control, decentralize the duties, decentralize the authorities, decentralize the responsibilities. That is, for example, if it's Reliance, Mukesh Ambani is not going to take responsibility for everything. What he did was, he divided the Reliance into so many sectors. For each sector he has made a managers. Managers again they divided those segment into the departments. For department they appointed a manager. Finance department, finance manager, sales department, sales manager, like that. They are responsible for that. And we are going to find out their performance by comparing or by taking the figures of their departments. Okay, how much they earned, how much they spent. Sir, certain departments won't earn only, no. For example, if it's a finance department, how they will earn? Nowhere they can earn unless they cheat on the organization by taking the money for their personal use, right? So it is not mandatory that all the departments which you segregate should be having both revenue center as well as cost center. Many departments will be having cost center only, but still there are certain measures in which you are going to ascertain how they are performed. For example, they might reduce the cost itself. Cost center is there, but when compared to last year, this year they are reducing a cost, which means they performed well, no? Like that. Okay. Concept note is there, branch versus department. What is the difference between branch and department? Department, a segment or a unit into which an entity is rationally divided. So inside entity only it is divided. Whereas branch, entity is somewhere you are going to establish a different entity. In the same organization you are going to establish a different thing. See here, branch, establishment of a large organization that is located in the different places. Okay. Purpose, see, there might be head office, for that there might be different branches, no? Different branches. Inside this branch also there might be department, department 1, department 2, department 3. So branch and department are not something different. Department is just a split of the segment, split of the entity, that's it. Okay sir. Purpose, what is the purpose of departmental accounting? Enhancement of effective operations, efficient management and proper control. To increase the control, to increase the efficient management, etc. Okay. Branch primary objective is to boost up the sales and revenue of the entity. Why you are going to open the branch? You are going to open the branch to increase your sales and profit. That's it. Yes sir. Location. Generally departments are not located in a different geography. Okay. Inside branch only there were different departments. Here I am sitting as a finance manager, again in opposite to me some HR manager is sitting, daily fighting only. Boss, credit my salary, they are like arrange for the funds, credit salary, arrange for the funds, that reels is there, no? That thing we will do usually, HR and finance. So location, department usually generated in the same location, all the departments. Branches, if we want to put it as a same location, then why you want a branch, right? You are opening a branch to get a new customers, so you of course you will go to new location. Interrelation, a department can never have a branch on its own. Department can never have a branch on its own, whereas branch can have a department. I showed no there. Head office divided into branch. Inside branch also there were different departments. Again department cannot have a branch. Okay, fine. Hope so much is clear. Basics of departments is clear. Is it clear guys? Yes. Okay, fine. Now we are jumping into the accounting of departments. Concept of departmental accounting. Okay. Although traditional accounting reflects the overall financial performance, that is P&L of what? P&L of the whole organization of an entity, it fails to provide the operating performance of each department. Your traditional method is giving a whole department profit. For example, traditional might say, okay, Reliance Industries, so much is the profit. Now, how much is through trends? How much is through footwears? how much is through smart, how much is through insurance, how much is through petroleum, how much is through Reliance Jio. So that we don't know. That we don't know, right? So it fails for that. It fails to give that information. To ensure adequate managerial control and proper decision making, it is necessary to ascertain the operating results of each department. To get a control over of everything and to make sure that, okay boss, we are earning enough. So what we are going to do, sir? We are going to maintain accounts of each department separately. Okay. The branch of accounting that gives emphasis on the assessment of financial performance of each department of a large organization is called as departmental accounting. So the branch of accounting which gives the idea of accounting for a department, each department separately, that is called as departmental accounting. Okay. Okay. What are the features of departmental accounting, sir? In the books of accounts, transactions are recorded department wise. Transactions are recorded department wise. Sales department separate, production department separate, finance department separate, that way. All expenses and incomes are recognized separately for each department. For each department, we are going to split our incomes and expenses. It is an application of responsibility accounting system. That is, the managers of that particular department are held responsible for the performance of their department. Each department is considered as a responsibility center. That is, performance of each department will be evaluated and each department's manager will be responsible for the department's performance. Both external as well as internal transactions are recorded. External as well as internal. For example, one department is helping the other department. Now, this is also recorded. And also the department is doing a transaction with the outsider, that is also recorded. For example, our Anant is doing a friends, Anant is running a friends. Now, if he is associated with some other manufacturer, that is also recorded, as well as he is getting from his manufacturing plant, from the Akash, which is called as freelance. From there also if he is getting, that also recorded. Okay. It provides information to internal stakeholders of the entity. It is not published, okay? Departmental performance is not published. It is only for the internal stakeholders, the managers, owners, for those people, HR people, etc. It is not for the outsiders, not for the public. Public is least bothered about how the manufacturing department of Reliance is doing, how the finance department of Reliance is doing. They are least bothered. Public is bothered about how Reliance is doing. Okay. It involves the drafting of departmental trading and P&L account. So finally, it involves in drafting of, that is preparation of trading and P&L account of each departments. Each departments. Okay, sir. Okay. What are the objectives? What are the objectives? 1. To get an analytical idea about the affairs of each department. That is, to get an idea about how each department is doing, whether they are reaching our budget, whether they are reaching our target, or the costs are under control, all these things to analyze. To ascertain the true operating result and efficiency of each department, to ascertain each department's efficiency. Otherwise what happens? Gumpinolag Govinda, which means some 4-5 departments will be working. With that, other 3-4 departments also will go. Performance, everyone will get a medals, everyone will get a promotion. Actual work was only 5 departments. How many people are getting, how many departments are getting promotion? 4 departments people are getting, 9 departments people are getting promotion. So to ascertain the actual performance of each department, we want this. To compare the financial performance among the different departments. To provide data and information to the management for decision making and policy formulation. That is, this department is not doing good, change the manager, or discontinue the department, merge the department with some other department. This department is not having work, give them a different work, merge with other department, like that. to take any decision, it is going to help. Okay, sir. Fine. Understood. Okay. Give me a second. Let me paste the things there. Done. Now, what are the different methods of maintaining a departmental accounts? Departmental accounts can be maintained in two methods. One is maintenance of a same set of books or maintenance of a separate set of book. Same set of books means we are maintaining generally one book, in that we are giving to different departments, or else each department is maintaining their own books. See how it works. Two approaches are usually followed for obtaining the individual figures of the various items of expenses and incomes. An organization can follow any one of them. One, maintenance of same set of books, or maintenance of separate set of books. So organization can follow the method in which it maintains the same set of books or it maintains the separate set of books. Okay. What about maintaining the same set of books, sir? See, the amount of the various items of expenses and incomes, etc., are gathered by maintaining the books of accounts in the tabular or a columnar format. Hence, this method is referred to as a columnar or a tabular method. Accounting department, centralized in nature, maintains the entire records. This method is widely accepted because of its comparatively less expensive. At the same time, what do you mean by maintenance of a separate set of books? Individual figures of various items of expense and incomes, etc., are obtained by keeping a book for each department separately. Hence, this method is referred to as a unitary method. Each concerned department maintains their records independently. Although the method is very expensive, large sized firms usually practice it. Nowadays, no one, okay. Nowadays, basically everything is a centralized ERP it is. They don't even keep a separate book for HR and accounts. Everything is there in the same software. Yeah, let it be. So, maintenance of books, two methods. Book can be maintained in two ways, right? Which are the two ways, sir? One, same set of books. The other one is separate set of books. Separate set of books. So, same set of books. It is also called as what? Columnar or tabular method. Also called as columnar or tabular method. It is also called as unitary method. Unitary method. Okay, sir, fine. Fine. Now you tell how the accounting is done here. Overall organizations income and expenses are recorded in a single book, and it was segregated to different departments to evaluate the performance. Okay. If this is the method, each and every department will maintain their own books to record income and expenses of the particular department. In first method, what we are going to do, sir? In first method, each and every department will be not maintaining it. One head office will maintain. One organization as a whole is maintained. Later, it is segregated among different departments. Whereas in the second method, each department maintains its own books. How much is expense paid by them? How much is income earned by them, etc., 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 etc. Okay. Okay. Fine. Now, preparation of departmental final accounts. Preparation of final accounts. How, sir? How? Components of departmental final accounts. In the departmental final accounts, what will be there? 1. Departmental trading account. 2. Departmental P&L account. 3. General P&L account. 1. Departmental trading. 2. Departmental P&L. 3. General P&L. Okay. What are the things will be there in the departmental P&L account, sir? This account is drafted in a columnar format. Columnar. Each department one column will be given, just like our partner's capital account. Okay. Columnar format where each column represents each department. It is prepared for ascertaining a departmental gross profit or gross loss of individual departments. In this account, the direct expenses are debited and direct incomes are credited. Okay. Departmental P&L. This account is also drafted in the columnar format. Same, just like our partner's capital account. For each department, one column, where each column represents each department. It is prepared for ascertaining a departmental net profit or net loss of individual departments. In this account, the indirect expenses are debited and allocated. Indirect incomes are credited after considering the gross profit or gross loss of individual departments. Okay. What is general P&L, sir? General P&L, this account is drafted for determination of the overall net profit or net loss of the entity. Each department will give different, no? So, merging of that is called as general. Indirect expenses and indirect incomes that cannot be rationally apportioned between the departments are debited and credited respectively. Certain income and expenditures you can't split among the departments. You can't split among the departments. For example, there is one cricket tournament. Every time it happens. Okay, every time it happens. Now, organization will pay every year certain money towards that tournament. Now, for which department you will give a credit? Sales department, they will say nothing relating to sales, we are not taking it. Marketing people say, there they announced your company name twice and no one heard also, and that you call it as a marketing? No, we are not taking. Production department, boss, because of you our employees also went there, because of you our department is getting loss, you have to pay us. In reverse, you have to pay us, not split, not giving us an expense portion. No, you have to pay us. That's what production department will say. So there are certain income and expenditures which you cannot rationally divide among the departments. So such kind of income and expenditure we are going to credit. If it's an income, credit it to the general P&L. If it's an expense, debit it to the general P&L. Okay. The format of this account is like the normal income statement. That is no department specific. Of course, because it is general. Why you want department specific? Department specific you already prepared. Department specific you already prepared. Right? Yes, sir. Done. So. I can write here. Components of department final accounts. Components of department final accounts. Three things are there, sir. Three things are there. Departmental trading account. Departmental P&L account. General P&L account. Departmental trading account, department P&L account, department general P&L account. Okay. Departmental trading account. Columnar format and direct income and expenses are credited and debited to the related department to ascertain gross profit, or loss, whereas departmental P&L is columnar format and indirect income and expenses are credited and debited respectively to the concerned department to the concerned department to ascertain net profit or net loss after considering gross profit or gross loss. Okay. What do you mean by general P&L, sir? P&L which is prepared for the whole organization, and expenses which cannot be rationally apportioned. Apportion means division. I think your costing faculty have told it. Rationally apportioned shall be debited in general P&L and income which cannot be traced shall be credited to this account to ascertain net profit or net loss of organization. Okay, sir. Okay. Done. Fine. Now let's look at some pro forma. Yes, sir. Pro forma. Format of departmental trading and P&L. Give me a second, people. Okay, see here, pro forma. See, each department's opening stock, purchases, wages, other direct expense will come, transfer from department to department will also come. It is just like sales to one department, purchase to the other department. And also in credit side, sales will come, transfer will come, closing stock will come. We can find out the gross profit. From that gross profit, we can find out indirect income will be there, and rent will be there, salaries will be there, depreciation and amortization, other indirect expense, and finally the balance will be transferred to general P&L. In the general P&L, there are certain items which you cannot split among the departments. Those will be recorded. Okay, and it will be finally transferred to the organization. See here, departmental P&L, and in that general expense which you cannot split, stock reserve. Listen very carefully. Now, as per our example, Akash is sending goods to Anant at invoice price. Now, actually Reliance hasn't, the organization which Mukesh is running, that hasn't earned a total so much profit. Anand earned, but it is not yet sold by Anant, which means that profit is there, no, that is notional. That we have to take out the profit. If we ask Anant, Akash, he will slap us, because he is already telling that so much only profit I am getting. Upon that, if he asks, he will slap. Anant also don't care. He says, I don't care. It is his stock, his profit. You talk to him. So what Mukesh will do is he will bring and put it into a general thing. Just go through the format, guys. Just go through the format. Okay, sir. Fine. So much is general P&L. Done. Next is what? Next they have given certain preparation steps for the preparation. Okay, steps for the preparation. We'll see what are the steps they have given. Of course, if we look at it with the numbers, then only we will understand. Hardly they have given 1, 2, 3, 4, 5, 6. Oh, enough number of illustrations they have given. 6 illustrations they have given. Let's see. Step 1, determination of a departmental P&L, gross P&L. How you are going to do? By preparing a trading account. Directly allocable direct expenses debited to the departmental trading account. Direct expenses that cannot be directly allocated. Apportion the expense on the some suitable basis and debit them to the departmental trading account. Directly allocable direct incomes, credit to the departmental trading account. Goods transferred from one department to the other department, debited to the transferee department and credited to the transferor department. Simple. Listen. Sir, Devrane artha aglila, sir. We didn't understand what you said. Directly allocable direct expenses. For example, wages. For example, wages. Tell me, wages is relating to manufacturing? No. Wages is relating to manufacturing. So, if you have divided your organization into two, manufacturing department and a retail department, this wages where you are going to allocate? Directly you are going to allocate it to the manufacturing. So, these are the directly allocable direct expenses. These are the directly allocable direct expenses. Okay, sir. Okay. Next is direct expenses that cannot be directly allocated. There are certain other direct expenses which cannot be directly allocated. For example, there is some floor manager. Okay. He is looking after the manufacturing as well as retail. Both. That manager is looking after the employees of the manufacturing as well as employees of the retail. He is looking after till afternoon. 4 hours he is looking after into the manufacturing. Afternoon he is looking after the retail. So this is directly not allocable. This cannot be directly allocated. So what we will do, in this ratio we will allocate. Some basis we will allocate. For example, if manager is getting a salary of 40,000, 20,000 we will charge to the manufacturing department, 20,000 we will charge to the retail department. So is it clear? Directly allocable, allotted and directly cannot be allotted. Is it clear, guys? Hello? Hello? There? Okay. Next, directly allocable direct income. That is, whatever sold by the retail is retail industry, retail departments. Whatever sold by the manufacturing department. Okay. Goods transferred from one department to the other department. When the manufacturing department sends goods to the retail department, or when the retail department sends back goods to the manufacturing department, just treat it as sales only. So which is sending will credit, which is purchasing or which is receiving, it will treat it like a purchase, which will debit. Okay. After doing all these things, what we are going to find, sir? After determining P&L, it is transferred to the departmental P&L account. We are going to transfer it to the departmental P&L account. In the step 2, we are going to prepare a departmental P&L account to determine the net profit or loss. Directly allocable indirect expenses. Retail manager salary. It is directly allocable, no? Directly allocable. There is some accountant who is relating to manufacturing entity, directly to the manufacturing. All these are the indirect expenses which is not directly relating to the production or directly relating to the activity which you are doing, trading activity or manufacturing activity. Those are considered as indirect. So those indirect, if it is directly you can allocate it, then direct it is. Indirect expense that cannot be directly allocated. For example, there is some senior manager who is looking after the whole organization. His salary is split into different departments in the ratio he will give time to particular department. Directly allocable income, indirect income. If any indirect income is earned directly by some department, directly you give. Indirect income which you cannot allocate. I mean, directly it's not there. For example, you have kept money in the bank, whole organization money. On that you are getting an interest. To whom you will give an interest? Which department? So you are going to split it into department. If it is not possible, you are going to show it in the general P&L. Okay. After that, you are determining the overall net profit or loss of the whole organization. How, sir? By preparing a general P&L. Indirect expense that could not be allocated to the departments, which is not feasible to allocate it to the departments, you are going to debit it to the general P&L. Indirect incomes that could not be allocated to the departments, you are going to credit it to the general P&L. Provision for unrealized profit, that is, one department might send a goods to the other departments at an invoice price, whereas the other department is not yet sold. So there is an unrealized profit, that also you are going to adjust here. Because if you want to adjust in that department only, then what is the fun of sending it at an invoice price? If you want to adjust it at that department only, what is the fun of adjusting it, right? Because the other department guy didn't sell. Manufacturing guy, he sold it properly, but the retail guy failed to sell. Why you want to put a blame of retail guy on a manufacturing guy by reducing his profit? So manufacturing guy's profit we are not going to touch. So retails, of course, you would have increased and kept. It doesn't matter to him because he bought it at an invoice price, kept it at an invoice price. Whole organization as a whole is not earned so much income. So in a whole organization we are going to deduct it. Okay. By balancing general P&L, we are able to get a overall net profit of the organization. Overall net profit of the organization. Okay. There are certain special transactions. What are they, sir? Items of income. Income which are directly allocable to a specific department or credited to the respective department. Income which are commonly for more than one department or apportioned rationally over all departments. For example, they have given, listen, discount received. Discount received is basically upon the purchases, right? If purchase department is 1, 2, 3, so many departments, then on what basis you are going to allocate? On the net purchase basis you are going to allocate the discount received. Sales commission. In sales also there might be different departments. So that commission will be split into different departments on the net sales basis. Okay. Other indirect income which are financial in nature, dividend received, interest earned on deposit, profit on sale of fixed asset are credited to the general P&L because we don't know whose money it is, right? If we had invested, whose money it is, we don't know. So we are going to show it in a general P&L. And these items relate to the organization as a whole and cannot be apportioned over the departments. Item of expenses, they have given certain item of expenses. What are they, sir? Expenses which are directly allocable to a specific department are debited to the respective department, which cannot be apportioned will be apportioned on this basis. For example, commission to purchase manager, carriage inward, etc. This you cannot allocate directly, no. So if purchase departments are so much, only one purchase department, directly purchase department. Inside purchase department are also there are so many. So on purchase basis you are going to give it. Selling expense, sale basis. Depreciation, insurance, repairs and maintenance, etc. Value of fixed asset used by each department. Rates, rent, rate, insurance, heating, etc. Floor area. If it's a insurance of the factory, floor area. Okay. Power, HP. The machine will be consuming power based upon the HP of it. Okay. HP into hours worked. All these things we are going to see once we start doing a sum. Don't worry, you will understand there thoroughly. Other indirect expenses which are of a general nature, that is general charges, sundry charges, MD's remuneration, miscellaneous income, etc., etc., as well as expenses which are financial nature, that is bank charges, interest on loan or debenture, are debited to the general P&L, as these items relate to the organization as a whole and cannot be apportioned over the department. So that's it. Not a much things are there. Departmental account is actually easy. Now you might be getting confused a bit, but once you start doing a sum, you will understand thoroughly on what proportion and all. It is a common sense. If you use a common sense, you are going to apportion on what basis it is. Fine. So shall we close for the day today, and tomorrow we will continue with the sums? Hello. Okay, fine. And you people are not joining the revision, right? So I will not on the Zoom. Is it okay? Okay, fine. Tomorrow we'll continue. Okay. Thank you. Bye bye. Take care. Bye.